What's up, man? Welcome to part 2 of the pullback mastery course. In this section, we're going to talk about the medium and deep retracements and how I actually trade around those situations in the market. Let's waste no time and dive right into it. That's what you're here for, right? So let's go ahead and jump in. So in terms of medium pullbacks, let's go up to a whiteboard. We'll do the same thing we did for the small pullbacks. Medium pullback, if you remember from the previous video you just watched, is something like this. We have a market trending up, and it's about a 50% retracement that normally lines up pretty well and doesn't go too far below the previous resistance level that was just broken by our previous impulsive move. In trades like this, it signals a healthy trend. Doesn't mean that the market's going to go skyrocket afterwards like we normally see in the small pullback area and in the deep retracement area if it does, but this means more so that we're going to continue in this healthy trend. So because of that, I like to look for slightly smaller targets. So in this case, the 1-to-1 risk reward is what I really like to use. And if I'm going to use that 1-to-1 risk reward, let me explain a little bit about the different stops and targets I like at this point. So if I'm going to enter the market on buying pressure, I want to see that 50% retracement that lines up with our previous level of resistance, and I want to see some type of buying pressure. This buying pressure can come in way of a candlestick on this time frame and then a retest of that candlestick wick followed by buying pressure pushing up. That's exactly what we saw on the dollar Canada deep retracement buying pressure. Or if you want to be aggressive about it, buying pressure can just be a long wick candle. Anything that signals that buyers are trying to take control can be a reason to enter the market on a trade like this. So this medium retracement followed by buying pressure would be the entry. After the entry, there's two different ways I use stops and targets on this trade as well. I will either place a stop loss below our previous swing low over here. So the stop would be here with our entry here. And this being the case, whenever I place a stop loss below this swing low, I like to look for targets at just a 1-to-1 risk reward because, again, even a healthy trend may not break much higher than that in terms of continuing in that trend. So with that being the case, this is the way I like to take targets if I'm going to put a stop loss below the previous swing low. Now, there's another way of putting stops and targets here as well that I like to use, which is the entry candle. So if this was my candle that I entered on, I might put a stop loss below that by 1 ATR, by 10, 20 pips, whatever you decide to do. I would put a stop loss below that entry candle, and that in turn would increase my risk to reward ratio to closer to 1.5 to 1. So with that being the case, you end up increasing your risk reward ratio, but you will have more losses in this case as well. This is why it's important to backtest this for yourself, figure out which pairs work best for which stops and targets. But now what I want to do is take you down to a actual chart, show you this on a chart, and then we'll go over the deep retracements in just a second after that. So let's move down to some charts and find some medium retracements. Let me delete all of this. A nice medium retracement that I already see is right here. So here we have a push up. Let's start our trending market from this latest impulsive move. We have a push up from here to here. We have about a 50% retracement here. And that 50% retracement is followed by buying pressure. Now, in this case, you have two options in terms of stops and targets, like I just said. Let's say you use this buying pressure candle here, our red candle that has a long wick to the bottom, as your entry. At that point, your entry would look something like this. If you decide to put your stop loss below the swing low before our impulsive move up, then your stop loss would look like this. And again, you'd want to look for something like a 1-to-1 risk reward, which ends up being hit in this case. Now, the other option we discussed is a stop loss below the entry candle. And this is what that does to your risk reward. You can now pull it up to right below your entry candle, and you go from a 1-to-1 risk reward to a 2.8. Again, you will lose more trades doing this. There is no doubt about that. But the heightened risk to reward ratio will make up for a lot of those losses. So that's something that's more so a personal decision. I vary between the two depending on different market conditions. So this is my medium pullback type of strategy that I would use. Now let's dive into our last type of pullback which is going to be the deep retracement. So let's dive into the deep retracement right now. And we're going to do that on the same trade we've been looking at for the deep retracements this whole time, the dollar Canada trade that we sent out in email analysis a couple of weeks ago that ended up being this huge runner, huge run up. And the reason we had the opportunity to do that is because we knew about this type of retracement and how powerful it could be. So for the deep retracement type strategies, one of my favorite things to do is wait for this deep retracement. Right here we have a trending market that I will zoom into a little more to make it easier to see. We have a trending market that we've already looked at a couple of times. We have our deep retracement, and similar to what I'm looking for on the medium retracement, after this deep retracement, I'm looking for buying pressure. Long wick to the bottom, followed by a retest of that wick, followed by a nice green candle. Anything that indicates buying pressure tells me, okay, now I want to be involved long because this is our last stand level. And if sellers are trying to push this market down, but this level continues to hold over and over and over, then the likelihood of this level holding and pushing the market back into an uptrend is very, very high. So with that being the case, what I like to do in terms of trading this is wait on that buying pressure. And again, let's just use the example of a long wick candle being your entry. So if that was your entry, your trade would look something like this. And in this case, I only use one type of stop loss. So in this case, my stop loss is always going to be below my last stand level. So what I mean by that is I'll have a stop below, after I get my entry, whatever the entry is, my buying pressure entry, my stop is going to go below the wick of the previous support level before the deep retracement. Okay, so with that being the case, my stop loss would be somewhere like here. And for the most part, normally I'm looking for a target up at the previous resistance level that was the resistance before the pullback. That normally gives a great risk to reward ratio. Again, it is a sign of a weakening trend, so you're going to lose trades doing this. This isn't a 100% accurate strategy, and this strategy in itself actually will probably provide less than a 50% accurate type of strategy, but the type of risk reward ratio you can get, this being a 3.2 risk reward, using strategies like this is insane. So even if you're winning at a 40% win ratio, you're still making loads of money because of this 3-to-1 risk reward average that we can get using this type of deep retracement entry. And for the bonus that I completely forgot to give during YouTube, I wanted to tell you about this on YouTube, but unfortunately completely forgot before I ended the video and edited it completely and uploaded it, but I remember it now. The bonus is looking out for this during a trending market. During a trending market, bonus number 4 type of pullback is what I call the 1, 2, 3 pullback. And it's dangerous in a trending market because it signals a reversal. If we have a market doing this, and this is the only time I don't trade deep retracements. Here's where our deep retracement would come into, right? If we get this move, I'm down. I'll look for possible buying pressure here. I know I have a small stop and a nice target. But if we do something like this, and we have our deep retracement area right here, but the market does this, creates a pullback and breaks that support level right there, and then comes down into this area, I do not buy. I don't even look for buying pressure because the likelihood of this market doing this is very high if we get this type of pullback, which is what I call the 1, 2, 3 pullback. So hopefully that bonus lesson will keep you out of any devastating reversal areas when you're looking for trend continuation.